Hey everybody, my name is Rod Rohde, and I am the product manager here at Man Mortgage. And I'm going to take you through a little training today I call Mortgages 101. With this, I like to give a background on what mortgages are, where they came from, and where the money comes from. Give you a hint, it's not banks. They don't have enough money. So let's talk about how a mortgage works and how the money flows. So we're going to start out with a little old lady out in Sun City. I'm located here in the Phoenix metro area. Sun City is a very well-known, long-established retirement community where a lot of people go and buy nice houses in the sun to spend their retirement years. So we're going to start out with our little old lady in Sun City. She needs a mortgage, so she's going to come see a mortgage professional. Now, she might go to a mortgage banker, she might go to a mortgage broker, and she needs a mortgage. So she could go to one of two places. She could either start out at a mortgage broker who will take her application and walk her through the process, or go directly to a mortgage banker. See, in this scenario, a mortgage broker does not have their own funding capacity to be able to fund loans with their own money, so they have to ultimately go to a mortgage banker like us here at Man Mortgage. We are a mortgage banker, so we actually fund the loans with our own money. It gives us a lot of flexibility and kind of cuts out some of the middlemen. But our little old lady in Sun City, she might go to a mortgage broker who then sells it to a mortgage banker like Man Mortgage, or she might go directly to here at Man Mortgage. So she gets her mortgage. Well, after the fact is the mortgage banker might decide that they want to sell that mortgage to a servicer, much like PennyMac. PennyMac is one of the largest institutional buyers of mortgages, and they are a servicer. So the little old lady in Sun City is going to make her payment every month to PennyMac because that's her bank. That's her mortgage lender. So she pays that to PennyMac every month. But what she does not realize is actually behind the scenes on this is PennyMac has bundled up her mortgage with a whole bunch of other mortgages and sold them on Wall Street as bonds through an entity called Fannie Mae or Freddie Mac. Could possibly be Ginnie Mae, some other ones. But in this scenario, we're talking about the little old lady pays her payment every month to Penny Mac. They collect her payment, but then they actually pass it on to Fannie Mae, who is going to pool these into bonds and sell them on Wall Street. You may have heard of Fannie Mae and Freddie Mac. They've been in they have been in the news a lot over the last decade. So an interesting side note for 2022, Fannie Mae reported a net income of $12.9 billion. Freddie Mac, their sister company, reported a net income of $9.3 billion. That's a lot of money. What Fannie Mae and Freddie Mac do is they collect all of these mortgages, pool them into bonds, and then sell them on Wall Street. So the little old lady pays Penny Mac, who sold the mortgage to Fannie Mae and Freddie Mac, and she has no idea of this. And then that bond is ultimately sold on Wall Street to a real estate investment trust. So these are hedge firms that specialize in lending in real estate. So they buy mortgage-backed securities because they feel like it's going to get a good return for those investors. So that real estate investment trust might hold it for a while and then ultimately decide, hey, the market conditions changed, our lending goals have changed, our earning goals have changed, our expectations have changed. We are now going to sell that mortgage-backed security that contains the mortgage of our little old lady in Sun City to a Saudi sheikh. So the Saudi sheikh may then hold on to that bond for a while, collecting the interest payments. So every month, little old lady pays. So every month, our little old lady in Sun City will pay Penny Mac, who keeps a portion of that payment and then ultimately pass it on to Fannie Mae, who is now paying that Saudi sheikh. So the Saudi sheikh carries the mortgage-backed security for a while, and then ultimately, let's say they sell it off to an insurance company. So an insurance company needs an investment vehicle. The mortgage-backed security aligns with their goals, so the insurance company might buy that mortgage-backed security from the Saudi sheikh in order to make a return, because part of what they have to do every month is pay a pension to our little old lady in Sun City. So this is kind of an example of the circle of money, how it could potentially line up, because this is how we get the money to continue to lend every year trillions of dollars worth of mortgages. So little old lady in Sun City pays Penny Mac, thinking that's who has her mortgage. But Penny Mac is actually just passing the payments on to Fannie Mae, who is paying the insurance company, which ultimately then pays a monthly pension to our little old lady in Sun City. But how do the numbers on this work, you might ask? So let's use an example. So ultimately ended up at a mortgage banker. So let's say Man Mortgage decides they're going to sell this $100,000 mortgage. We're just going to use $100,000 because, so Man Mortgage sells this $100,000 loan to PennyMac at, say, 7.5% interest. PennyMac is going to pay a price of 101.9. That's the terms we use in the bond market. So it's basically paying 101.9% of the loan amount. So therefore, Man Mortgage receives $101,900 for that mortgage. Now you might be going, hey, that's a lot of money to make, but it's not really the case, because remember, the first $100,000 of that $101,900 is the loan. So $100,000 of that comes back for Man Mortgage to lend back out to the next customer, and then the other $1,900 is retained for earnings, paying bills, paying me, this camera, that computer, all that stuff. PennyMac now owns it, and then what they might do is then sell a bunch of those loans to Fannie Mae. So they deliver a whole bunch of loans at a 7.5% note rate into, today it would probably be a 6.5% bond, which is paying about 99.55. So that's a weird one, because it's actually paying less than the total outstanding balance of the loans you're buying. And a pretty good deal for Fannie Mae, Freddie Mac, the REIT, the Saudi Sheikh investment company. They are also going to collect a servicing fee. Now, we mentioned before that PennyMac is going to collect a servicing fee out of our little old lady from Sun City's payment. So that is included in her payment. So they keep a certain amount of money. So in this instance, because we are writing the mortgage to the little old lady in Sun City at 7.5% interest, but we're selling it in a 6.5% bond, the servicing income is about 1% a year. There's a bunch of money that comes out of that. It's not exactly that. Way too far in the weeds for what we're talking about right now. But let's just say that's the case. So PennyMac is going to collect a servicing fee of 1% or $1,000 per year for servicing this loan. Now, in this instance, let's say PennyMac thinks we'll probably keep this loan around for 3 years. We think that she'll keep this mortgage. She won't refinance. She won't sell. We will have this mortgage for 3 years. So they're going to collect 1% per year for 3 years. So that's 3% of the loan amount. So they're going to deliver the bond at 99.55 plus 3% is a total price of 102.49. That is what PennyMac is valuing this loan at. So once again, they get that money to pay Man Mortgage, and everybody gets their money back. We can relend and we can make money off it. Or if you work with a company like Man Mortgage, you notice we have a dotted line over here, where Man Mortgage does have the capability to actually sell directly to Fannie Mae and Freddie Mac. Heck, we can even issue our own bonds, so we actually have the ability to sell directly to that real estate investment trust and actually cut out Fannie Mae and Freddie Mac. It's up to us. We look at the market all day, every day. We have computers, we have programs, we have a bunch of stuff that are doing this to deliver the best possible price to our customers. So in this situation, if we think that this loan might last longer than the 3 years, we might decide to keep it ourselves. The little old lady pays Man Mortgage and we sell it directly to Fannie Mae. But if we don't think the economics of that are very good, or if we think she might sell in a year because we're going into a recession and everything's going to come down, we might go, hey, PennyMac is overpaying. We'll take their money. It's all good. So that's how it works with that. And then, so we talked about is PennyMac sold that whole bunch of loans, and then Fannie Mae sells that $100 million bond at 6.5% in the bond market at $100,000.05. They make about 50 grand off that. It's a little lower than usual, but relative to other investments, it makes a lot of sense. And with the volume instituted here, it still works out to be a lot of money over the course of a full year.